Hi, welcome to the Market Alert for Tuesday, the 19th of December 2023. So Goolsby grounds bond bulls, but Bitcoin, black gold and big tech bounce. As the subhead says, I was surprised that the market reacted that way. The markets are ahead. This is according to a new Fed member called Goolsby. No doubt we're seeing more of him as we go through next year. US stocks finished mixed while crude rises on Red Sea risk premium. Whatever's going on in the Red Sea, no idea. And economic news today, we've got building permits and FOMC member Barkin speaking as well. There's another new one as well. I've not heard of he or she before. I don't know which gender. You never know with any gender these days, frankly. But anyway, let's move along. Have a look at the markets and kick off with the Dow. So in the Dow, as you can see yesterday, very, very quiet. I think the markets are going to be quiet for the next couple of weeks, to be honest with you. They've managed to bring the markets up significantly. And at the moment, the last couple of days, quiet and becoming more quiet as well, as can be seen there. Range bound yesterday for the Dow. So depending on how the markets are today, maybe calling it a day tomorrow for the festive season, because let's face it, with these sort of ranges there's not a lot that you can really do. So let's have a look at the Dow, see if this is the same. In the Dow, again, narrow range, but the market is making lower highs after creating its new all-time high at 17,004. But again, you can see a lot quieter yesterday than it was during Friday's trading session. The 30-minute chart, there's about a 100-point range, which is fine, but that didn't really start to happen until we got going sort of 9:30. The market was down, then it was up, and then from 9:30 traded down to the swan. Found problems with the low as well of Friday, and then continued lower down to the swan there. At the moment we're around at the DP and the close. We're struggling with the 50 EMA though for this market at the moment. In the S&P 500, still marching towards that all-time high. We have to look at the monthly chart to see this. Let me just bring this down a bit. That 4817.5, still trying its best to get to that. I should still have money on this one getting that to that sort of level. But again, 30-minute chart yesterday, fairly quietish, but moving the opposite way to the DAX. So again, you can see the manipulation here of trying to get this to the all-time highs before they let the markets move back to the downside. Close is important, as is the DP for this market to hold at the moment as well. In the FT 100, the market reversing off the 200 MA during yesterday, and in the 30-minute chart, you can see there the reversal moving up sharply, and overnight the market lending support to this market at the close of yesterday as well, just to get through the high, would see the market then continue to move back to the upside in the daily chart, and these would be the sort of target areas that you would be looking for this market to break through, particularly the 77.01 level coming from over to the left of the chart. And then of course you've got the high of Thursday last week, when the markets were making the all-time highs for the Dow and for the German DAX. 30-minute FT 100, like I say, we've already seen this, the market moving up fast and above the close, just the high to take out at the moment. In the US dollar, the market sideways, as can be seen there. Yesterday we struggled with the 5-bar moving average overnight. We're just trying to get back above this at the moment. Meanwhile, in the metals, silver down yesterday. No surprise there. As I said, it would take out the low from Friday. It did. Market still sitting at that 38% retracement. Up on the overnight in the Asian market, early electronic session, and then hammered back down. And at the moment, struggling to stay above the close, and the DP just doing that at the moment. But more so the 50 EMA, where the market's struggling there as well. It's had a look through once, twice, but it's being pressured on the downside. So watch today's low and the 200 MA in the metals. Gold also, as you can see, lower highs for the last 3 days, and a lower high overnight as well. The market's springing up yesterday. I think this may have been to do with whatever's happening in the Red Sea, and then the market back down in a range beforehand, and then overnight also managing to move back there as well. Again, trouble with the 50 EMA as there was yesterday, even though despite spiking above it, trying to hold, they soon brought it back below this level. Good average actually, the 50 EMA, to see how well the market's doing. It's a bit like the DP really. If the market's above, then it generally is okay, and if it's below, then it's going to or likely to move lower there as well. In the gold-silver ratio, moving back up yesterday. It's red at the moment, but no doubts about this moving back to the upside as well there. So let's have a look at the basic trades for yesterday. The market's fairly quiet, so tough going at the moment because there's no follow-through when you're getting the sell and the buy signals. So the market moving lower and then becoming choppy. Like I say, I think it's a sign of what we can expect for the next week, to be honest with you. Market below the low. So obviously it's going to attempt to try and get back as quickly as possible above this level. And we can see there the market below all three averages, but in a sideways area, testing there, moving the market lower and then bringing the market back. We started off with a potential buy signal, and then the market put in a potential sell, which it then filled. So that stopped out the buy signal as the market again was trying to get back above that low. So the short is then taken out and the market then starts to move back above the low. Trailed this up to try and recover some of the points there from the first two losers. The market then starting to come back, and then we got economic news. So out of the trade, market then reacts to the downside, finds support at the BRN there, psychological level, and then wants to get back above the low. But after this, the market becomes sideways to higher, and then eventually makes its way back, which you can see there. And then for the remainder of the morning and all the way through to the US, the market is sitting just above the below the low there, which you can see. So didn't do a fat lot at all during yesterday, mid-morning to the afternoon, and then the afternoon also very, very quiet, just drifting lower. And again, we have another losing trade here as the market tries to head back, but then fails at the 50 EMA, with prices then making their way back, as you'll see just there. So very straight. Well, it's not strange. It's perfectly normal for the run up to Christmas that the market becomes very, very quiet. The Santa rally's out of the way. As long as there's no major economic news, then the market will hold and tread water for the duration of the next couple of weeks, particularly stock markets. Currencies may be different, but as far as the markets are concerned, stock markets, DAX, S&P, etc., then you'll get this sideways move. However, as we saw with the S&P, there's a good chance that they're going to run that one, if they can, to the all-time high. If it's not before Christmas, it'll be in between Christmas and the New Year, so that they can say that it made its new all-time high. Quick look at the overnight markets in the 2-minute chart. So the markets at the moment sideways to lower. You can see yesterday's high there. You got yesterday's low. We're at the mid-range at the moment, but below it, and all of the averages. The averages are compressed as well because the market is so quiet there. So let's see what happens today. Barely any economic news. It's Tuesday. Any news from the weekend will have been absorbed by Monday's action, and that wasn't fantastic. So, like I say, be prepared for a fairly quietish trading session during today. So with that, have a good day, and as ever, thanks for watching. See you in the next one.